We are now in the first full week of January 2025. Although I say it's a full week, but we are ending up, markets are closed on January 9th for the funeral of President Jimmy Carter, right? We've started this week kind of mixed. If you take a look at what's going on, you might say, well, wait a minute. I see the markets. They're all moving higher. Not everything is moving higher. We got gains in the stock market. We got gains in the Dow, the NASDAQ, S&P. Tech is looking really good again today. Commodities are a little so-so. Bitcoin, we'll get to it in a moment. But if you take a look at what's going on for the week, all right, which is driving everything for the beginning of the week, we've got a lot of reports coming out. Okay, we've got ISM, we've got PMI, we've got JOLTS, we've got job openings, we've got the employment information, that ADP employment for last month's coming out at the beginning of the week, or at the end of the week. We got initial jobless claims, we got non-farm payrolls. We got a lot of stuff crammed into this week, and it's all going to happen in 4 days. All right. Obviously, this is going to help us with the health of the economy. I want to just start out right here. Right. We discussed the presidential cycle. You were with me last year. Discussed the presidential cycle. We discussed the election cycle. We're now into year one of the 4-year presidential cycle. Now, what you're going to find is in year one, we typically see less returns. We see less returns in year one and year two. Year 3 and 4 are where typically the patterns show that we get some really big moves in the market. If you take a look at what happened last year, for instance, and I'm going to start with the S&P 500. So we were up 27% over last year. Big moves to the upside, right? So that really comes into play with what happened in year 4. Years 3 and years 4 of the 4-year cycle seem to be very bullish for the stock market. So don't be surprised if this year, even though we've got a new administration coming in, we've got all these job-friendly, business-friendly, crypto-friendly, ideas that are supposed to really jolt the market. We could see, and I'm going to say this again, I'm going to say this, several different times here. We could see a buy the rumor, sell the inauguration event, as I'm saying right here. Is this a buy the rumor, sell the inauguration event? Very well could be. All right. When you take a look at the S&P, I looked at the latest chart. This is a chart from November, right? November of 2024 to present day. And what you're going to see here is you see what the markets have done. I've got the Elliott wave on here. We got a pullback from around 610 down to around 580. It was about a 30-point pullback in the S&P 500. December really turned out to be one of the weakest months of the year when you look at what happened from the beginning of December to the end of December. But January has turned out to be a good start. And so if you take a look at where we were this morning, so this morning's our first full trading day, first Monday in January. We were trading down around the 597 area. You look at the targets now. Targets are now 623 to 650 when you look at the contrarians. The contrarians are saying, let's buy this thing. And so 623 to 650 is our target. A lot of green to the upside. If you're going to use a stop in anything, whether it is trend, whether it is contrarian, whether it is seasonal, I usually like to pick a significant low. The significant low I'm looking at was at the end of the year. Just a week ago, we had a significant low down here around 580. We've had a big bounce since then. That's about a 17-point move from here to here. All right, so 53 points to the upside target, 17 to the downside risk target. That's about a 3.5 to 1 risk to reward ratio just on SPY, not options. Just on the asset itself, right? So that's the stock market. We got to look at bonds. We got to look at commodities. Bond market looks really interesting. While the stock market is moving higher, the bond market has been moving lower. Now, if you're a pattern trader and you're a long-term pattern trader, then you probably know that we've got patterns that Long ago, it used to be stock market up, bond market down, and vice versa. Then it switched, and it switched around 2020, where the stock market and the bond market ran together. They ran up together, they ran down together. And somehow, in the last couple months, this, this positive correlation between TLT and SPY jumped off the railroad tracks. So now what's happened is, since the end of the year, or since before the election, we saw the markets, the bond market above 100, came all the way down into below 90, popped up for a bit, but is now moved lower. As you can see right in here, we've gone from about 95, this is December, to 86.99, but actually below that. We hit new lows today. As this trends lower, rates move higher. If rates go up, potentially that's going to be bad for stocks. I think, again, everything's put on hold until Inauguration Day. Hold that thought. Let's jump to USO, the oil markets. Why are the oil markets moving higher? Because we're supposed to drill, baby, drill. That's supposed to ease pressure and ease prices on oil. Well, there is some retooling that is going to be potentially happening over in the Middle East. That's going to cost a lot of money, right, to retool the oil, their online drilling. So they're going to put that into the price of Middle Eastern oil. But wait, Tom, what about all the drilling? What about everything we got to turn on back here in the U.S.? Yeah, that can happen. But it might take months before we're fully up to speed with everything the Trump administration wants to do. Might be 6 months, right? So what I expect is we're getting a little pullback here, and we could pull back down into Inauguration Day, but then I expect we're going to hit that seasonal bullish pattern in February, all right? March, April, May, June. We got 5 months where I expect to see seasonally oil move higher. All right, let's move on. Take a look at gold. Got GLD here. Look who's consolidating now. What was it? Oil last month? The bond market a few months before? Now it's gold that's consolidating. We're seeing higher lows and lower highs. Higher lows at 235 and 240, and now we're getting into that 243 area. Lower highs, which started out above 255. Then we had a high that topped out at 250. Now, most recently, we've had a high at 245. This thing's going to go one way or another. My expectation is that gold will possibly break down, break down below the 235 area. I expect somewhere around 225, 230 is going to be the area that we're going to see for potential support. Could be because seasonally it's not a good time for gold. We're out of the holiday season. You're going to see less buying pressure in jewelry and in precious metals. You also got countries like China, which have found some really big veins in gold. That's been reported recently. A little bit of each of those could cause some downward pressure in GLD. There's one more thing that could cause downward pressure in GLD, and it's this: Bitcoin. So Bitcoin went back above 100K, and it did it. It did it, folks, this morning. All right, we were trading around the 98, 99, 98, 97. This all happened over the last several days. Well, this morning it broke above 99, hit 99.5, 99.7, 100, 101, 102. We were at 102 by the time I snapshotted this. 102, so above 100. So I'm looking for one or the other things to occur. We have a lot of reasons why Bitcoin is destined to move higher over the course of 2025. And so what I see is one of those things being the potential strategic Bitcoin reserve. Now, I'm not going to go into this in detail, but we could see, there's people that are out there saying we could see a God candle when this happens, right? What's a God candle? I didn't even know what a God candle was. A God candle was basically doubling the price that day. So they're saying that if this strategic Bitcoin reserve is created, that we could see a double in Bitcoin. I would say that's a pretty good reward to risk ratio. But here's what I believe is going to happen. I believe between now and Inauguration Day, we're either going to see a buy the rumor, sell the inauguration, or we're going to see a sell the rumor, buy the inauguration. What's it going to be? Well, we have to see what happens between now and Inauguration Day. All right, that's coming up. It's not that far away, folks. So there you go. That's my take on stocks, bonds, currencies, commodities, Bitcoin. If we add this all up for 2025, it looks like this. You look at trend outlook, it's bullish. You look at stocks, bullish. Bonds are bearish right now. All right. US dollar is bullish. If bonds are bearish, the US dollar is going to be bullish. I'm looking at oil. I have bullish here, but it's really for going into the front half of 2025. Gold, slightly bearish. Bitcoin, I definitely see as a bull. But when you look at where we're going, at least into the rest of January, you got a trend outlook bullish. You got earnings outlook, which is bullish. You've got contrarians that are now bullish. They were bearish coming into December. Now they flipped to bullish because of what happened to the markets in December. And even our seasonal outlook is for January looks bullish. So overall, we have a strong bull, at least into Inauguration Day.